We saw, just a pretty wild ride on the volatility side and really cross asset class throughout the day yesterday, right? So, I think at was it 7:30 or so in the morning, you had the sort of intraday peak in VIX at 65 at that time. To your point, rate cut expectations were basically just completely popping. And then, over the course of the day, they obviously came in a decent amount and have come in a bit further this morning. But as we sit here now, we're still in a wildly different place than we were even as recently as Friday last week. So, just to be crystal clear on that. And I don't think that we've gotten to the point where, things have entirely settled, right? I think there's so I mean, to take a step back, it's like, you had a lot of sort of, we talk about this all the time, right? But you have to have these condition sets, right? That sort of precipitate. It's almost an analog to like, the great man theory of history, right? But you have to have these precipitating condition environments where you can sort of have these things happen, where the environment was ready for them to, right? You'd already sort of gotten to an environment where you could have that sort of critical threshold at or near, and then, you hit the phase transition and you get the fireworks. But, the precipitating environment was there already for quite a while. And then, we can say it was the Japanese, Bank of Japan rate hike. But there were a lot of other dynamics that were needed before that sort of catalytic event took hold. And so anyway, I think the kind of rambling, but I think the point here is that those precipitating events and that same dynamic that suddenly pushed us over that critical threshold over the weekend and into yesterday, they're still there. And, has this giant, carry trade unwind fully run its course? Probably not. We'll see. But, the underlying dynamics around the fragility of the U.S. Cycle, the point at which we're at here in terms of, growth slowing, and obviously inflation still remaining a headache for the central bank in the U.S. All those things are still there. So it'll be a really good call at 11, because I think it'll do a great job of juxtaposing, not getting sort of, hyperbolic around what's happened in the last 24 hours, but at the same time, basically saying, hey, look, the environment that we're in sort of, led us to this point. Here's where that all stands. And obviously what happened yesterday did happen. And so where does that leave us today, right? So a lot of cross currents. We're going to cover them all, and I think it'll be a super topical, super timely update.
The macro tourist wants it to be all about the yen carry trade, right? If you just completely get caught off sides, which most people do, it's always, let's just find that one thing. Let's find the narrative. It's always shifting narrative. Remember, Fed cuts and narratives, and that's what that is. I mean, that was, to your point, just one of the many components that caused the avalanche. Again, these are called emergent properties. It's not like the yen wasn't breaking out on our signal. It's not like we didn't know the Japanese economy supported a rate hike. It's like, all these things, right? But now it's on the cover of the Journal, and all these people who read the paper are going to tweet about it. Oh, can you believe the size of it? It must have just been the yen. It's. I don't want to insult anyone's intelligence here, wasting any more time on that. I mean, there's this guy, Warren Buffett, who sold half his Apple and you got that news on the weekend. I mean, there's so many. I already talked about Amazon. I'm not going to insult people's intelligence that are doing the work with us on the call, because we'll just let the tourists do what they're doing, because we need them. Perversely, we need them to remain alive somehow in this market and play against us on the other sides of these trades.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.